All these stations that have come on board are actually struggling for the same box of advertising revenue. And we've more than increased our number by 100-fold, if I should say. We had numbers, I think Samson did mention the number. For stations, we have 513 stations out of 707 authorizations. Nigeria is hardly scratching about 450 now. And then for television, we also have 121. Now, when I come to taxation, Ghana specifically, we have no special provisions or tax breaks, even though the numbers have increased. There are no tax breaks here. In 2020, I remember during the COVID, for example, the group of the GJA, GIBA, Primpag, and other media, we had a number of engagements. And we asked that the media carried all the government communication throughout COVID. They worked throughout without a break. And we asked that they must give a stimulus package, for example. It never happened. In 2014, there was also a media development fund. It was poorly implemented and eventually was brought to a stop. So that also never continued. Now, broadcast owners in the report will tell you that because of the inflow and the struggles of the inflow of cash, they have asked that why doesn't the NCA review the cost of authorization? We've increased the number of stations that much, and we've not seen a decrease in the authorization rates that stations are paying. So what are we saying? NTA, is it possible to reduce this so that the burden on stations would be reduced? The other thing about tax breaks, that basically goes more to the print industry. Imported books get some exemptions on tax, but when you have local literature, there are no exemptions and benefits that are provided. Like all other businesses, media organizations are compelled to do their tax laws. And historically, and the good thing is that we've not had many cases where stations have come into trouble with the GRA. However, there are some cases that came up, and it's important to mention that the influence of such things when they happen. In September 2015, I remember Angel FM was charged with owing the state some taxes. So their offices were sealed off by the GRA. That was resolved. In 2017, I remember NCA, there was another outcry from the broadcast industry on fines. Huge fines were imposed on stations to renew their authorizations, and that was resolved. However, a number of free-to-air stations today, as we speak, are caught up with a new thing, which is they are being asked to pay for free-to-air communication service taxes. Now, Samson, CST is a consumer tax that is supposed to be paid. Now, to transfer this onto broadcasters and insist that some of them pay, and some of them have had letters as far back as 2015 to pay taxes to date. Basically, we've now moving to the point where that could mean that you're actually shutting down that station. Because one, the tax is not a tax that free-to-air stations are supposed to pay by law, but this is actually being enforced. We've done some engagements on this, and some discussions are supposed to follow up between the MOI, the Ministry of Finance, GRA, and GIBA. But these cases tend to reinforce the perception that tax liabilities can be used to intimidate critical media, especially specific news organizations. They started and we've stopped. Now, talking about the increase in pressure for revenue, now that the revenues have been depressed, and they've also been depressed because there are alternative platforms that people are using to disseminate information. We now have online. People are reaching in country to do the same thing, and a lot of the stations have now lost a lot of ground on ad revenue. But this has not stopped has not enabled a discussion that the stations have had with regulators to look at, especially the financing of stations. The whole game has changed for a lot of stations. Rather, we've had an increase in number of stations. And as I speak, I know stations are even now struggling to even pay their regular licensing. The other big issue, which is also another bill, which comes to another bill that we are also praying that it's looked at and passed, is coming from advertising revenue, which is the main source of revenue for free-to-air stations. Whilst we've seen a reduction in terms of ad spend on radio and TV on the traditional platform, a lot of advertisers have moved to digital. This has also depressed the revenue income of a lot of stations. So there's the need for, we're asking government to pass the bill which brings about, it's called the Advertising Council Bill. This will enable us to regulate the advertising industry. What is happening is, because there's so much competition for adverts, a lot of stations go in for deals, and the advertisers tend to give you a payment period of sometimes 120 days or more. So what happens is that stations actually will run adverts, but there's no cash flow and payment is due in 120 plus days. Now, this has been a rule of thumb because it's just been an open regulation. Nobody actually put it there. But a lot of stations are in so much debt because now when it comes to even the period of payment, this doesn't seem to happen. So as part of it, in other countries, what they've done is they have put in clear regulations on durations, etc., on payments to stations. This we can only achieve if we get also the advertising bill also coming through. Now, so you find we are actually also supporting AAG to pass this so we can bring in these regulations and allow us to increase the revenue of stations. We also are looking at other funding options. We have spoken about public broadcasting in the past, which had to do with TV licensing, which we know now when somebody would say is mundane. Because to collect TV license, you must have serialization, serial numbers of televisions, etc. It is just not practical. We've had discussions. There are other alternatives that should happen, but this has not happened. So these are some of the things in the area of funding that we really would have wished that engagement happened to improve the funding of the stations.